So let me tell you what I have learned by trolling through endless pieces of data and interminable conversations about what's going on right now. First, our thinking is muddled by issues of things called supply chains and supply availability. We need to free ourselves from these mental handcuffs. They obscure more than they illuminate. I know you're probably sick of hearing supply chain too. So I have an idea. Let's look at one of the greatest companies in the world, Estee Lauder. Talked about it earlier. It just reported its best quarter ever, 11% organic growth, double digit. Even in China, which is plagued by lockdowns, as we heard from Starbucks the other day, they had high single-digit growth. I find that incredible. Yet Estee Lauder stock tumbled 5% today, and a lot of that's because the analysts are now worried that China's slowing. See, that's absurd. What matters is Chinese demand. All right? The latter is a false tell. Supply is not the issue here. What we know is when Chinese consumers were faced with the opportunity to buy Estee Lauder when the stores were open, that's exactly what they did. When China ends its lockdowns, I think we'll see the demand for these products soar. That's why the stock of EL is a buy, not a sell. How about travel? Now, we know from Alphabet's conference call that travel inquiries are extraordinary. People are hitting the road. It means that airlines will need more aircraft. There are only 2 companies on Earth that make commercial aircraft at scale. Airbus is pretty much sold out. That means the orders go to Boeing. It also means more business for aerospace suppliers like Honeywell. Yet both stocks are down, with the latter perceived as a gigantic loser because it had to guide down aerospace. Well, what were they supposed to do? Raise it because Google searches were big? I think we're asking too much from some of these companies. Again, though, I feel confident telling you to buy Honeywell, as I did in our morning meeting 10:20 a.m. broadcast for the Investing Club. And it's been a tough week, I know that. But if Honeywell goes down again, I would buy more. This is a real company making real things, real dividend, real profits. If we weren't restricted in it, I would buy some right now. Now, some of the confusion comes because of something unprecedented, the Omicron storm. In retail, the first week of December and even the second week were possibly the strongest brick-and-mortar numbers in years. But then Omicron exploded, so the third and fourth weeks were disasters for brick-and-mortar, as customers went right back into hibernation and, for the looks of things, buying from Amazon. Again, though, let's go back to demand. If there was demand for product, it simply switched back from brick-and-mortar to online on a dime. And that's how we know that MasterCard and American Express saw amazing demand. They don't care if you go out or stay home. They get you either way.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.